All right, here we go with number 8 from week 7, quiz access chapter 3. So it gives us a trial balance, which is all the info we need, and then it asks us to do the closing entries for the cruise company. This is an adjusted trial balance. Remember, in order to do a closing entries, you need an adjusted trial balance. All the adjustments have to have been made. And really, remember that all closing is the process of closing out those temporary accounts, our revenue and our expenses and our dividends, and moving them to a permanent account called retained earnings, so that we're ready to start the new financial or new accounting period with those temporary accounts reset back to 0. So the first, the first closing entry is going to be to close our revenue accounts. So if we look at our revenue, we only have one revenue account, number 404, service revenue. It has a credit balance of $37,700. So to close that out, all we're going to do is debit that account, $37,700, and now the balance will be 0. So to close revenue, we debit the revenue account. Where is it? There it is, service revenue. And we're going to credit income summary. Income summary is a temporary account we just use for the closing process. Again, I'll look at the amount, $37,700. I'll debit service revenue, $37,700. That'll make the balance of service revenue 0 now, and credit income summary, $37,700. Record that entry. Now we'll close our expense accounts. So our expense accounts will all have debit balances. So we're just going to credit those accounts by their balance, each one of these, to bring the balance to 0. So depreciation expense, $612. Be nice if I could see all those. Salaries expense, insurance expense. Oh, I just made a mistake. Sorry, we're not. Those accounts have debit balances. Okay, we're gonna credit those accounts. So my debit is going to be my income summary account. Sorry about that. Made a little error. And then I'll debit each, or I'll credit each of the expense accounts. 612 depreciation expense. 622 salaries expense. 637 insurance expense. 640 rent expense. And 652 supplies expense. So again, we're just going to credit them by their balance. I wonder if we can bring this transaction list up and it not be in our way. Nope, they'll bring it up exactly in our way. Nope. Okay, so that wasn't great. It looks like it screwed everything up. All right, well, I guess we have to do it again. So that's what I get for trying to make life easier. Welcome to life, huh? All right, so I'm going to debit income summary, and I'm going to credit each of those expense accounts. There's depreciation, salaries, insurance, rent, and supplies. Then I'll look at each of those. So depreciation expense was 2,000, had a debit balance of 2,000. So by crediting the account 2,000, I've now made the balance 0. Salaries expense, 21,979. Insurance expense, 1,583. Rent expense, 2,526. And supplies expense, 1,244. Is it 1,244? 1,244. All right, and so my debit now to income summary is going to be the sum of all of these credits. So 2,000 plus 21,979 plus 1,583 plus 2,526 plus 1,244. 29,332. That should be it. Now we have to close income summary account. If we weren't keeping very good track, we're gonna have to go back and look, okay? So income summary, I credited the account 37,700 and I debited the account 29,332. So that means I'm gonna end up with a credit balance of 37,700 minus 29,332. 29,332. So right now we have a credit balance in our income summary account of 8,368. So to close out income summary, then, if we have a credit balance, is we're going to debit income summary 8,368, and we're going to credit retained earnings 8,368. Recognize that anytime we have a net income, we'll end up with a credit balance in income summary and have to close it by debiting income summary and crediting retained earnings. So net income, once we close it, is going to increase retained earnings. If we were to have a net loss, we would have a debit balance in our income summary account, and we'd have to close it by crediting income summary and debiting retained earnings. So a net loss will reduce retained earnings. And finally, we're going to close our dividends account. So dividends, we close straight out to retained earnings. So here we have a debit balance of 6,000. So we're going to debit retained earnings and credit dividends. So this will have the effect of reducing dividends down to 0 and reducing or lowering the balance of a retained earnings account by 6,000, because dividends is money we're paying out to the shareholders. We'll check our work, since I very easily could have made a mistake in there. I was talking so much. Looks like we're good on that one. So now we'll go to the second requirement, and it says post a post-closing trial balance. And so in essence, what we're going to do is it's going to look just like the adjusted trial balance, except it's not going to have any of these revenue or expense accounts on it, because we've just closed them all out to 0. And the retained earnings balance will be different. So we'll go ahead and just enter those. We have cash. Maybe it's going to let us. Oh, I'm returning to the question. Sorry, after you check your work, it does that kind of super annoying thing. All right, so we're going to return to the question, and we're going to say, I'm going to start with cash, then supplies, then prepaid insurance. Cash, supplies, prepaid insurance, equipment, accumulated depreciation on our equipment, do we not have any liabilities? Cash, supplies, prepaid insurance, equipment, accumulated depreciation on the equipment, common stock, retained earnings. That's it, no liabilities. Common stock and retained earnings. Are we missing anything? Cash, supplies, prepaid insurance, equipment, accumulated depreciation, equipment, common stock, retained earnings, dividends we closed, revenue we closed, and then all of the expenses we closed. So that should be right. So now it's just going to be the same balances on all of these assets. So 18,000 on cash and 8,400 on supplies and 2,000 on prepaid insurance, 23,000 on equipment, a credit of 6,500 on the accumulated depreciation, common stock had a credit balance of 2932. And then we have to, here's where we're going to have some issues, is retained earnings is the one that changed. If you remember, on our closing entries, we actually made some debits and some credit entries to retained earnings. So retained earnings had a balance of a credit balance, that's the normal balance, okay, of retained earnings of $39,600 before we did those closing entries. So if we had a credit entry of $39,600, then back in requirement 1, when we credited retained earnings for our net income, that would have added to that balance. So we're going to add $8,368. And then here we debited retained earnings for the dividends. That's going to leave us with a credit balance of $41,968. Hopefully it balances, and it does. So we'll check our work, and we got it right. Okay, again, sorry for the little mess up in there. Hopefully, though, that helps you through the problem. And as always, don't be afraid to reach out if you need more help.